this is a pretty simple Excel spreadsheet. So it has been designed to forecast cash for 12 months. You will see there is just one tab, 12 columns for 12 months. The yellow fields are for you to enter the amounts. These ones are blocked, so you, actually they are not blocked here, but they can be blocked. So there are some just examples of cash going in and cash going out, the most common types of cash going in and out. You can design it, you can modify it in whatever way you want. Just to explain you how it works, there is an instruction in this tab. So as I said, the spreadsheet is designed to help you plan cash flow for 12 months. You can change the names of months, yes. So this is just the generic name, month 1. You can change it to whatever month you need. So there are most common types of income and expenses. Yellow fields are editable. This is where you enter your figures, yellow fields, and these fields contain formulas, so you shouldn't change them. So now you can read the instruction later on, but I will just show you how to do it. So the first thing to start with is your cash opening balance. So let's say you are planning to, today is end of October, you are planning for November. So November is your first month. All right. And you are entering the opening cash balance, which will be the closing cash balance for your end of October. So let's say, okay, so let's say your opening balance for 1st of November is 10,000. You can see that the formulas are already calculating the figures. Then we go through cash in. So you are expecting to receive 5,000 from your customers, VAT refunds 100, income tax returns, refunds nothing, loans received, you are going to get a loan of another 5,000, you are going to invest your own money of 1,000, okay? So that's your planned revenue for the next month, cash in rather, okay? Just an example. You can see that the formula is calculating your total cash in. Now is your cash out. You are planning to buy a computer for 1,000, a phone for 500, a printer, maybe not, office, a desk for €100, 5,000 in materials. You are going to pay wages of 10,000. Let's give it a shot. Payroll tax liabilities, 1,000 just for simplicity. Owner's salary, so you are going to pay 2,000 to yourself and so on. 1,000 in rent, okay? And so on. You can go through the list. You can add your own expenses. You are going to pay 500 to your accountant. You are going to pay 200 in advertising. What else? Vehicle fuel, 200, tax, 200, loan repayment, you are going to repay 100 in loans. So that's your planned cash outgoings for November. You can see that the system, the Excel has calculated your total outgoings. So you are going, your money in is 11,000. You had 10,000 at the end of the month. You are going to spend 21,000 this month. Your net cash flow is minus 10,700. So your net closing balance after taking into account your opening cash is in minus. So you are in overdraft. So you have to do something. After you reduce your expenses, you are not going to, you have to pay rent. You are not going to buy computer equipment, for instance. You are not going to buy this equipment, or you have to increase your revenues. But most probably you can't do it straight away in 1 month. So when you deducted, when you resigned, you are not going to pay to your accountant, let's say. So what's the position now? So now your net cash flow in this month is minus 8,700, but you had cash at the beginning. So your closing cash balance is 1,300. Pretty good, much better, okay? So how can you plan next month? You can say that your receipts from customers are going to be 5,000 every month, so you can copy it across, okay, because you have stable income, perhaps. You are going to receive another VAT refund in 2 months. You are going to put it in here. You are going, loans is a one thing, owner contribution, you can manipulate it. Sometimes if you are low on cash, you can decide you have to put your own money into the business, okay? Same with expenses, you can copy, if there are, for instance, if your rent is the same expense every month, you copy it across and you have it every month. The next ones of, the ones of expenses you have to plan individually. The best thing to plan your cash flow is to look at your prior months and see what is the trend in your expenditures. When you have your regular bookkeeping, it will be much easier to plan. Okay, so that's the cash flow forecast. I will send it to you with together with the tutorial. So now we need to go back for a few minutes to our presentation to okay, so that's the practical examples. So a quick summary of what we discussed. So we went through the basic concepts of double entry. We talked about assets, liabilities, and equity, expenses and revenues. We talked about the difference between turnover and profits, expenses and cash payments. Then we talked about how to account for purchases, sales, and VAT transactions. Finally, we talked about profit and loss and balance sheet account and a bit about cash flow, and we went through some practical examples. Hopefully you found them useful. So that was our agenda for today, pretty tight, I have to say. Hopefully you didn't find it too overwhelming.